Good morning, everyone, and welcome to this morning's webinar. Apologies, as usual. I wasn't sure whether we were recording, not recording. It's my fault. Anyway, we are ready to proceed with the webinar, but as usual, may I refer you to the disclaimer, which I believe you can see on your screen. As you know, trading can be hugely risky, so please don't ever think of using money that you cannot afford to lose. As always, it's myself and my husband David who will be running this session. And in this session, obviously, it's the London. Well, looking forward to the London Open. Europe has opened already, and we will be looking at the markets and the charts through the prism of volume price analysis, supported by our fantastic quantum trading indicators. For those of you, I know we have all sorts of traders of different levels of experience coming to these webinars. We have our quantum users, we've got some students who are on our Forex program coming along. So, you know, it's a lovely mixture of traders. But just in case this is your first visit and you perhaps have never heard or have never come across the methodology of volume price analysis, it's a methodology that David and I have been using, well, ever since we got involved with the markets. So almost, goodness, it is coming up to 20 years now. But you can find details on the methodology at Amazon in the books that have been published over the last 3 to 4 years. The books that pertain to Forex, we've now bundled together into what we call the Forex Trading Library. There is obviously the volume price analysis explanation, which is like the chart analysis, the technical analysis of your overall analysis. Volume price analysis, in other words, chart reading, is only one skill that you have to develop as a trader. You then have to move on to understand how these markets work as a whole. In other words, you have to understand how the fundamentals, what are the fundamental drivers at any given time, and then on top of that, you then look at the market as a whole. And this is what we call relational analysis or cross-market analysis. There are 4 main capital markets, as you see here. This is a slide from the education program. We've got bonds, equities, commodities, and Forex very much sits at the heart of all the capital markets. It's the money market. It's where money flows at lightning speed, and in that flow, it picks up sentiment, it picks up whether markets are risk on or a risk off, and it's really understanding the connections that exist between the markets. It makes you what I suppose is a more complete trader. There are traders, I have to say, out there who simply look at charts, who, you know, the chart is the starting point and the ending point, and that's fine if that's what, you know, and if they are successful with that, that's brilliant. There are traders out there who only consider the fundamentals. They only consider themselves to be fundamental traders. The charts are all voodoo, as it were. But in all honesty, the way the markets are, I've just said that was okay maybe 20 years or so when we first started, David. Would you say that would probably have been you know, an assessment that, yeah, you would fall into one camp or another? But the way the global markets are these days, the way information sort of comes through at lightning speed, there is this interrelationship between the capital markets. It was always there, but I think now with technology and with data and with information being much more readily available, people can kind of join the dots up much more easily. You know, back in the day, it was, you know, you read the Financial Times and, you know, you hoped by the end of it you could make sense of what is going on. I would also add, and we said this before, there's probably a fourth element, and that is the political elements. And given the appointment of the new head of the ECB, you could honestly say that politics is very much now taking centre stage in the financial markets. I mean, Christine Lagarde, whatever you think of her, she really, I think I read somewhere rather I think that's a cruel comment, but perhaps someone ought to give her the textbook about what a central bank is for. She certainly ain't no economist. Or now you could argue that's probably a good thing, given that economists have hardly covered themselves in glory in predicting the next downturn, as it were. So anyway, that's the way the wind is blowing at the moment, and as traders, we have to be aware of that, because that will come through into what we are seeing on the charts. Now, as I said, the tools that we have developed for the markets to help us with our trading with the Forex, we have 4 very specific ones. One is the currency strength, the matrix, the array, and the heat map, and we call them, we've bundled them together and what we call the currency dashboard. You don't have to buy the dashboard, you can just buy one indicator from the dashboard, and the one that we always say is absolutely, we would say absolutely key, is the currency strength indicator, the one on the left. And when we look at the charts, you will see exactly why. It is just, it just gives you an instant snapshot of what is happening at any given time in any time frame, but more importantly, what is not happening, particularly today, as it's the 4th of July and the markets, some markets closed early in the States yesterday. There's not the participation level. There won't be, there'll be hardly any participation level this afternoon, and that is going to affect the price action on the chart. But we'll look at the indicators in more detail as we look at the price action at the live edge of the market. Obviously, the indicators are quantum trading. As I mentioned, you can buy one, a bundle, or there is a full package. A lot of traders just buy one just to test the indicator, but also test us as a company. They may not know us from a hole in the ground, quite frankly, but whatever you buy from us, whether you start with one in a bundle and then you want to upgrade to the full package, you will always get a credit. The advantage of the full package is that when we develop new indicators, they are automatically added to your full package. For example, the last indicator that we developed was one for the British pound. So all our traders who had the full package is automatically added. They don't have to pay any more money. You get 24/7 support. They are indicators for life, and all upgrades are included, both to the indicators themselves, and there's always upgrades to platforms as well. We always make sure that the indicators are compatible with the latest version of whatever platform you're using, and they're all covered by a 7-day money-back guarantee. The platforms we have available: MT45, NinjaTrader, TradingView, and we are working on TradeStation at the moment. If you hop over to quantumtrading.com, that's where all the details and the pricing for the indicators, you'll find them all there. You find videos, pages of explanations. You can take a deep dive and discover more about the indicators. The program that I mentioned earlier, we call it the Complete Forex Trading Program, because we really do believe it makes you a complete trader. It is self-directed, and you can take your time in working through the program. It includes the full package of trading indicators. If you've bought anything from us, you'll automatically get credited against the cost of the program. And as I said, it just gives you what we believe everything you need to know to trade Forex with confidence. And the website for that is quantumtradingeducation.com. And I always forget, basically, that we talk about these in this webinar. If you need any more information, you can either drop me a line, anna@annacooling.com, or david@quantumtrading.com, on anything that we talk about, the indicators, the books, whatever. Just drop us a line, and certainly the quantum trading site, they will respond by return, as it were. I have to say, for myself, it is a little patience is required, only because I do have a lot of emails that come through to me, and what I do is I answer them in strict order of sequence, as it were. So if and I do my best to cover them all. My own site, annacooling.com, is where you'll find my latest analysis, stocks, commodities, and all the Forex stuff I tend to cover at my Forex trading page. David, is there anything else you want to add to that?
I would add something if I could find my chat box, which I've now found. Very warm welcome to you all. Lovely to see you here. Oh, you can't hear me. No? Can you hear me? No? Hold on. Can you hear me now? No? Could you hear me earlier or not?
I did hear you earlier. I just have to turn yourself off for a minute.
Okay.
Apologies for that. I was just oh, David says he can hear you. Could you just tell me, can you actually hear? Right, I will turn myself off and I will get David to turn himself. Could you, someone just put into the chat box whether you can actually hear David?
Let's try again. Hopefully you can hear me this time. Anna can't for some reason, unless she's got her volume. Oh, you can. Oh, she can now. There's a jack plug that's fallen out somewhere. Apologies. Sorry about that. Anyway, lovely to have you here. Won't hang about. I have to be honest and say there isn't a great deal going on in the market, which is hardly any great surprise. Certainly on some days it's best to step back and just either do some background reading or do some study or do some practice or just step away from the screens for a day. Some days it just isn't happening, but there are things going on. It's a little bit sluggish. You've still got a lot of VPA lessons. The indicators will tell you that there's very little going on, so we'll cover that as well. If you've got any questions, just drop them in the chat box. Happy to answer them there for you, or longer questions we'll answer on air for you as well. Glorious sunny day here in Hampshire, so I hope it's nice where you are too. Just going to pass back to Anna and we will get going.
As I mentioned in the introduction with the currency strength indicator, which I've actually added to this chart, but I've also added what we call the matrix, and I'll explain the reason why in a second. And when I said earlier, what the indicator tells you is what is happening to an individual currency at any in any given time frame. The time frame I have here is the 30-minute chart. It's the chart that I tend to use, either this or the 1 hour. It's my benchmark chart. It's my anchor chart because I tend to focus on the faster time frames, and it gives me, as I said, a snapshot of what's been moving, what is moving at the moment, but more importantly, what is not kind of moving, and what we don't want to see. Especially in a busy, busy trading time when things are supposed to be happening, is you don't want to see the lines all bunched up in the middle here. It tells you, the prices will always move. This market doesn't stop during the week. It will stop on Friday evening and reopen on Sunday evening. But when they are all bunched up here together, it tells us that, and particularly when the lines are moving in the same direction for the different currencies, it tells us an awful lot of congestion. The trading ranges are very, very narrow, and sometimes it's reflecting perhaps a major a piece of fundamental news. Tomorrow we're going to have NFP, seasonality, time of year before a major holiday. But at the moment, what it's reflecting is the fact, as I said, today is a holiday in the US. Now you could say, well, why is that having an effect here in Europe and London? Well, it just does, and that's all you have to accept. And this is what this indicator is telling you. Does it mean you won't find an opportunity? Well, it depends. If you are on a very fast time frame, and if you're on a non-time based chart, such as a tick chart or a Renko chart, an opportunity may actually present itself. And there was an opportunity earlier on this morning. If we look at the yellow line here, which is the British pound, and we look at the magenta line, which is the Japanese yen, this morning, as you can see here, there was when we first started around 6 o'clock, there was a cross of these two lines, and there had been some British pound buying, and there was some selling on the Japanese yen. And when you get this divergence that we see here, we know there is a trend underway. Now, that's the first step, if you like. That gives us an overview of what is happening at what has happened, what is happening at the moment, and the probability of what is going to happen in the next this is 30-minute chart, so I'm looking ahead 30 minutes and the next few hours. Now, by putting them, this is an analysis of the movement on an individual currency. What we then need to do is we then need to see, well, that is one currency. As was said earlier, it was the British pound. But is that, what are the moves, where are those moves strongest for that particular currency? And this is why we developed the matrix, because it takes those the price action in the individual currencies and pairs it up into giving us or highlighting is where is the strongest move. Now, the matrix moves in real time. Now, when we looked at it this morning, all the British pounds where there was that strong buying of the British pounds were lined up at the top. The euro pound, obviously because it's the inverse, was down at the bottom. And in fact, it highlighted that to either look at cable, or in this case it was the pound yen, which I have on a separate profile. Now, you could do this manually, and the way you do this manually is you basically set up a profile of the seven pairs in what we call the matrix for, this is for the British pound. So you would do one for the British pound, you would do the reverse for the yen, obviously, and see, depends on which currency you are tracking at any particular time. Now, this is the daily chart, but it's, you could set these to any time frames, and it was really to see what is happening with the currency, because as I said, the currency strength indicator was highlighting there was buying in the British pound. Now, that is actually, as I said, literally in the last sort of hour and a half, that has really seriously come off. And we can see here, this is the daily chart, we can see the buying that had been overnight has come off. And this is what you would do on a manual basis. But as you can see, you've got to scan 7 charts. It's actually quite hard to see, well, and movements. You've got a lot of rotation of buying and selling of individual currencies through the different pairs. Movement in one pair might be correlated to another. It's how this market works. So, which is why the reason we developed the indicator in the first place. Let me see if I can, where have I done with it? Here we are. Hold on a second. There we are. So at the moment, what's happened, we've had a sort of bit of reversal of fortune for the British pound. We bring up the matrix again. Well, where is that most strongly reflected? Well, we've certainly got the British pound at the bottom. Where's the yen? That's probably not dropped as much as it hasn't dropped as much as the British pound. And up here, we've also got some buying of the euro and selling of the British pound. And what we do is we go back and look and see, well, the euro this morning, this little bit of price action here, it really wasn't going anywhere. It was looking very, very sorry for itself, but now that seems to have ticked up. What's interesting is the dollar has also gone up, so they're moving together. That's also telling us that there's probably some congestion there. What the matrix is telling us for the euro, so let's go and highlight what the movement in the euro is, that the strongest buying, or the most buying of the euro, in fact, is against the British pound. But we can see that because the pound has weakened. In fact, that's now dropped its top spot there. But where are all the other euro pairs? Well, the next one is the euro New Zealand. And where is the euro dollar? Well, the euro dollar is not really doing very much at the moment. So, so as a trader, if you were looking for an opportunity and you weren't wedded to maybe a little basket of currencies, this is the kind of information and data that you would need, and you would need to know it immediately. If, on the other hand, you like to focus on maybe 1, 2, maybe 3 or 4 pairs, you would still use it in the same way, because what it highlights, it highlights, is there an opportunity at the moment in your preferred pair? And if you are a euro dollar trader, you may think, well, it's probably not one to consider at the moment. Certainly keep it in mind, but wait until you get some kind of divergence before before taking any trading decision. And that's what this indicator does. It does all that work for you in the blink of an eye. Now I'm just going to go back to the euro yen, because that's the one I looked at this morning in particular, and the profile that I have for the euro yen. As I said, in fact, I've got the 1 hour one here, but let's go back to the 30-minute, because the piece of the price action that I was looking at was really this cross and this divergence. Very small, not huge, but what attracted me to this was the fact that it was the steepness of the lines, and it looked like it had a bit of sort of momentum behind it. And then my profile for the pair runs this way. Let's move that to 30-minute rather than an hour. I have the combination of the matrix and the CSI. I also have over here with MT5, this is MT5 platform. One of the advantages of MT5, just to sort of sidebar for a second, is that you can, so they have what's called a docking facility, which means you can detach individual charts and move them over to another screen, and it just makes makes life an awful lot easier. You can't do it on MT4, and this is the index that we've created for the British pound, and I would keep that. If you're in the British pound, you would keep that up to to see what whether we are buying or selling the British pound. I'll just move that over there. All right, so what do we have here? Let's expand. This is the 3-minute chart. Let me go to the, is it the 3 or the 4? Let's have a look, because this was a really nice, here we are. This was the move that was captured in that divergence that we saw on the CSI. It was actually a move that started from a breakaway, a successful breakaway from the volume point of control. The volume point of control is that area on the chart where there is price agreement, there is balance on this chart in this market. A trend, if you like, is imbalance. There is a divergence. There is this asymmetry. This is very, this is when price rotates around the volume point of control, or look to break away and comes back all the time, it means there is no firm direction. Traders, they don't want to push it in one direction or the other. When you do get a breakaway, and a trend is a breakaway, it's a breakaway from a congestion period, from an area of supply and demand, from accumulation and distribution. And here we have, there's a really nice trend up. And what's interesting is we had a breakaway, we had these up candles, but what we also have is we have rising prices, and we have here this really nice falling volume, which also tells us, volume price analysis, is that probably this is not going to go very far. In fact, let me go back to the 3-minute, because my 3-minute was, where am I here? 4-minute here. No, let's stick to the 4-minute. There we are. And what volume price analysis is like a warning sign. It highlights these anomalies, because you need volume for prices to both rise and fall. We then had a pullback, it carried on higher, and then we did actually get the reversal. We got a double top here. Volume price analysis is candles and candle patterns, but it was also signaled on the CSI and the matrix, because this pair was driven, as I said, back on the CSI, by some really nice pound buying, and then we had the reversal within the CSI here. You can see here we had the reversal here, the reversal on the yen, with yen buying, and now they're sort of meeting in the middle as well. And what it does, what the CSI, it captures the oscillations. This is a market of mean reversal, and as traders, that is what we want to do. We want to buy low and sell high. And what I have here also is the is my Renko indicator. It's acting. It's got a little bit of a bug in at the moment. We've had a bug fix for the Renko. So those of you who are quantum users, if you go into labs, David, will Carlo put it in there? Yeah, it should be uploaded. Yes, we have a section on the site called Quantum Labs where we put all the information on our indicators and any upgrades. And if you go into Quantum Labs, you'll be able to pick up all the latest. So I'm not going to go into that because, as I said, what with the internet and the little bug fix that we've had, I'm going to move away from the Renko at the moment. I'm actually going to move away to David. Have you got, what were you looking at, the pound yen or the cable? I've got cable. Oh, David had cable because it was either pound yen or cable. It was a close choice between the two, and we'll have a look at what cable has been doing. And just to finish on the 4-minute chart here, had this double top, had this move lower, and as I said, we're now moving into London. Volatility back to the volume point of control. Got 3 minutes towards before London opens, and we'll see what happens. I'll just move over to you, Don. Is that all right? Yeah, hold on a minute. Okay.
Apologies for the silence. I was just looking for the link to Quantum Labs. It's labs.quantumtrading.com, and we will put the details up. I think, please don't quote me on this, but I'm pretty sure we're going to upload that later on today. So it'll be available from late this afternoon onwards, I think. But hopefully that will resolve some of the issues we've been having. I've just been on cable for a little while, pretty much since 6 o'clock. Very conscious of the fact that we are now coming into the London Open. As I said earlier on, even in these relatively sluggish markets, there are still, excuse me, there's still opportunities to be had if you want them. This is the 30-second time frame. Got 30-second, 2 minute, 5 minutes. Excuse me, just 1 minute. 30-second, 2 minute, 5 minute across the top. Down the bottom, got 15. Got this 10. Sorry, these are reversed. Apologies for that. It should be the other way around. 10 and 15, and over on the right-hand side daily. If you're a cable trader, then you'll know that it's been pretty bearish the last few days and continues to remain bearish. Where are we targeting? Probably down to 125 as a maybe as a stopping point, and from there on, possibly deeper still. Certainly getting into some light volume on the volume point of control here on the daily. So it's there's very little, and there's very little in the way of price support around that region anyway. So that's what we're looking at in terms of certainly from a longer term perspective. Intraday, as you can see, it's been sliding lower, not with any great momentum, but the one I really wanted to highlight was the 15-minute chart, because what you're looking for in these moves, just from a price-based perspective, the sort of candles that I'm always looking for in a down move, and bear in mind that I'm heavily skewed to the short side, as I know a lot of other traders are as well. It's just one of those things we have to live with. What you're looking for constantly, and there's two really nice examples here. Once a bearish trend gets underway, it's these sorts of candles that I'm always looking at. I want to hunt these out. And the analogy that I've used in various webinars and also in the course in the education program itself is, imagine this as a water-filled balloon, if you will, that's gradually filling up with water. I'm sure you've done it yourselves. You fill one up with water and it gradually gets heavier and heavier. The balloon elongates and eventually, of course, it explodes. And that's kind of what's happening here. The market's tried to rally. You get this big wick to the upper body. You get the weight of water in here, if you will, in the body of the candle, and then it goes and on to the next one. And we had another repeat of it here. Effort to rally, not so much water in that balloon, but nevertheless, it's a signal that the strength of the rally is very weak, and by extension, the strength of the trend is therefore very strong, and that's what we've seen. And I can't stress it too strongly. Those are the sorts of candles to look for. They don't necessarily appear like this as in a line astern. What you often see is you'll get the congestion phase develop, so you'll see a reversal or a trend lower begin. Then you'll start to see maybe a congestion phase develop, so we go sideways. Then you'll see one of these, an effort to rally, maybe even another one, maybe a slight uptrend to it, and that is giving you a strong signal that and of course coupled with volume, if you see this with decent volume underneath, then you can infer immediately the market is trying to rally, the market makers are selling into weakness, and there's further downside momentum to come. And of course all of that is very simple lessons again. You've got a nice 2-bar reversal here. We've got some decent resistance which it hit at this level up here, this blue dash line on the accumulation distribution indicator, which is priced based. It's looking at resistance and support from a price perspective. In other words, the number of times that region has been tested either from above or below, and therefore becomes a ceiling or a platform of support. And the thicker the line, then the more developed, the stronger that region is likely to be. So this was tested. This was a decent region. We had a decent effort to rally here, so we've got decent top in place here. Then we're through some more solid support here, which was breached. This was breached. Now we're down onto the volume point of control, so we're trading around this region. And all this candle tells us, it's not a signal of reversal. It's purely telling us we've got a congestion phase ahead. We've got a long-legged doji, narrow body. The top of the wick is here, the bottom of the wick here, so it's pretty much symmetrical. Perfect example, really, of just market indecision, which is what we're going to see a lot of today. It's also enhanced by the fact that we had another decent level of potential support down here, which held, and it's another reason for using multiple time frames. The volume here, this is 7 o'clock our time, so this is local time UK, so we're opening up in Europe here. Now we're through into London. As you would expect, volumes are increasing, certainly not as dramatically as they normally would do, and we've had some rising volume here. So we've got a price waterfall here through Europe from 7 o'clock to 8 o'clock. On rising volume. Now we're starting to see, as we often do, as you come into London, you're starting to see the reversal effect come into play. Up onto the slower time frame, the faster time frame charts, that effect is starting to ripple through. You can see it in the trend monitor. We've oscillated around the volume point of control here. Now we're starting to see that effect, that shift in sentiment from what was decent selling of the pound has now been reflected into some reasonable buying of the pound. It's not reflected over here on 5, but this is what you're looking for the whole time. You're looking for from your fastest time frame. This could be a minute, could be 5 minute, 10 minute, 15 minute, whatever your window of opportunity. And what you're constantly searching out is whether that reversal is a genuine reversal or whether it's just a temporary pause in the longer term downwards trend in this case. And I use that in inverted commas because it's a very muted move, but the principles are exactly the same. It's trying to understand both through the prism of volume and price, but also through the indicators as well. Because what you're seeing on a multi-time window like this is the reflection of reversals in sentiment, which will always start in the fastest time frame, and ultimately, if they are a true reversal, will go right the way through onto your slowest time frames and all right the way down here. And if it's not, then it's simply a pause point. And part of that will also be reflected on the CSI. Never forget that when you're looking at the CSI, what you're seeing on a 5-minute chart or a 5-minute time frame may be very, very different to what you're seeing on a much slower time frame. And what you're seeing on the fastest time frame, when you're seeing all those constant reversals and pullbacks, which are part of the whole business of mean reversion, is simply that. On a slower time frame, it's just a reversal or a minor pullback. But for a faster time frame trader, a scalper on a 1-minute time frame, it's an opportunity to trade a reversal. So it's all to do with your concept of time and the framework that you're trading. If you're an out-and-out scalping trader on a 15-second, 30-second, 1-minute time frame, terrific. You are probably trading what the slower time frame trader is merely considering as a pause point and a minor reversal against their position. and what you're trading is an opportunity to take a handful of pips out of the market. And you could well be trading different directions. A trader right now on a scalping position for cable could be trading to the upside. Someone over here on a probably extended out to maybe 30 or an hour or even onto the daily, you're looking at this and saying, okay, fine, well, I expect cable to deteriorate further. What I'm looking for today is probably a congestion phase down here. It's not going to do very much, and perhaps tomorrow it's going to descend down to the next level. So they're not particularly bothered, and you're making money and they are making money. That's what the business comes down to at the end of the day. It's as simple as that. You can see the transition going on in front of you. You've got the trend monitor has now reverted to blue. Bear in mind, this is, this looks quite dramatic. Just pop that up there. But in terms of actual pip value, it's not huge. This is from 70 up to 79, so 9 pips. For a scalping trader, that may well be enough. The volume is supporting. We've got the trend monitor supporting. We're moving through these levels of what were acting as price resistance are now becoming price support. Got the same thing going on here. This is on the 2-minute time frame. You can see this is London. Then we've got this big surge in volume coming in. Nice deep wick to the lower body. Lots of buying in there. Decent buying on this one. That's fine. Then we've got a bit of a congestion on this candle. Now we're seeing further buying. What have we got ahead? Got a low volume node ahead. So, moving through 83 should be relatively straightforward. Got some decent volume up here and also another area of price-based resistance here. So when it gets to 85, you may expect to see it congest a little bit for 2 reasons. Firstly, because you've got volume resistance in the way on the volume point of control, which is what this is telling you. So you're looking at volume in exactly the same way as you do as price. It's a volume-based resistance because you've got orders sitting there. Clearly the market was congesting. You can see it over here. It was congesting at that level. So it's a reasonably important level of price for whatever reason. You don't need to know the reason why. Just accept the fact that this is a decent area where there are going to be orders sat. There's going to be people who've got trapped into weak positions, all sorts of orders up here. The market congested, and therefore there is some resistance from a volume perspective. And in addition to that, we've also got this region here on the accumulation distribution. It's a decent level. It's not particularly strong, but it's strong enough. And combined with the volume may well be enough just to cause a pause point if this is going to go further. Trend monitor's blue, as you can see. We transitioned. We went through the full spectrum here. We went from bright red, dark blue, and out the other side into bright blue. That's the perfect arrangement, if you will. It doesn't always do that. But so sometimes it will skip one of those. It'll go from maybe bright red. Sometimes it even goes from bright red to bright blue in a very fast move. But generally, you're looking for these transitional colors to tell you, or the indicator is telling you, that the sentiment in that trend is weakening, and therefore looking for either a congestion phase or alternatively a full-blown reversal. And in addition to that, we've also got the trend monitor comes with a second indicator, which is the trend line. And what the trend line does, it gives you a perspective on the extent of the trend and the strength of the trend, how far it's moved away from this black line, which is the fulcrum, if you will, the zero of the indicator. Just pull that up a little bit. There we go. So it just gives you a sense of how far we are away from the fulcrum, and also in addition obviously gives you a sense of how strong that move is, where the crossover point is, etc. So it's 2 indicators. It's one, you can either have it on or off. It's a personal choice.
Sorry, Ryan, the 15-minute pound index is actually shot up, but it's against the I'll make sure against the against New Zealand.
Okay.
Swing over to the New Pound New Zealand.
Do you want me to pop over there?
No, have it over you because it's easier.
Okay. Pound's moving very strongly against the New Zealand, apparently, on the matrix. Just watch this for a moment. What's also happening now is, as you can see down here on 15, we've got the volatility indicator triggered. So we know for a fact that we've got volatility. The indicator triggers in real time. You don't have to wait for the bar to close. It's already there. What's this telling you? 2 things. First of all, we've got very fast price action. So we've got volatility, because all volatility is just compressed price action in terms of time. So this move, under normal circumstances, might take place over 2 or 3 time frames. In other words, 2 or 3 15-minute candles. It's all being compressed into one because the market makers are in a hurry. They want to make some money. They're going to rack the market up very quickly. Volatility is therefore triggered because we've moved outside the average true range, which is how the indicator works. It's a very simple indicator, but immensely powerful. And the powerful aspect of it is the anticipation of what is likely to happen next, because volatility and market makers go hand in hand, and what they are trying to do is trap you into a weak position. So the expectation now is that this market is going to congest within the spread of that candle, even more so if it closes off the highs, which it looks as though it may well do at this point. How much longer have we got to go? Not a long time. And at that point, you expect the market to congest. If you're trading this alongside, you're in it, I would suggest you get out, because the next thing that's going to happen, it's going to move sideways, almost certainly. If it doesn't, and the market continues higher, and it breaks through this level here, that's fine. You just jump back in again. What have you lost? Alternatively, if you're trading multiples, then scale out, take some of your profit off the table and leave something to run. But if you're trading a single contract or a single position, close it out, sit in your hands and wait till this has calmed down and moved on. Volatility is a perfect mechanism which is used all the time by the market makers and the big operators, because it's so simple. Because what it does, it trades on your emotion. Your emotional response is you see a fast moving market, and it goes back to primeval instincts of seeing something moving fast and wanting to kill, because that's what it all comes down to. You're a hunter, you see something that's moving quickly, and you've got to react fast, and you move in for the kill. You haven't got to you can't think about it. It's a meal. Grab it while it's there. That's really, in a very crude way, what this is about, because your emotional response is jump in, fear of missing out, FOMO, and all of that, and you get trapped into a weak position. Now, ultimately, the market may well carry on in the original direction, but what you then suffer in the interim is the pain and anguish of sitting in a move through a congestion period, uncertainty, doubts. You may well get stopped out anyway, but that's what it's all about. It's all about the emotional psychology of trading. So when you see this indicator triggered in real time, you know for a fact what's going on. Just pop that down there. And really just to pick up on, some not very simple VPA lessons. Here we go, up onto 2. What have we got here? Good strong volume, nice wick to the upper body. What's that telling you? You've got a decent region in here. The market is going to reverse a little bit. Now, it doesn't automatically mean that the market is just going to reverse straight back down again, go the other way. In these market conditions, it may well do, because it's just probably going to oscillate in a relatively narrow range for most of the day. But nevertheless, what that is telling you as a trader, it's giving you a very, very clean signal of what is likely to happen next. And this business is all about anticipation, and that's what volume price analysis does for you. It gives you that heads up on what is likely to happen next. It's very simple. Yep, just going to move back to Anna.
The reason I just wanted to hop over back to my MT5 is a couple, because I just wanted to highlight something, and this was the trigger of the volatility indicator. Now, on the pound yen, it actually triggered on the slower time frame, which is so you can see here on the 30-minute chart, and that's really significant because it hasn't triggered on the faster time frame, but because we've got a trigger on the slower one, and particularly the chart that I like to consider as I said, my kind of benchmark chart, that I'm comparing the price action. I've got the 4-minute chart here. I haven't had a trigger here, but because it triggered on the slower one, it kind of confirms that it tell me that weakness will be coming along, and indeed it does. Now, whether that what then happens with the volatility is the high and the low of the candle, particularly when you have it on a slower time frame, then it's another way of judging support and resistance, because having this triggered on the slower time frame, seeing the reaction in the faster one, now if this is going to carry on higher, clearly it's got to break, on this case, the high, if it was going in the opposite direction, the low. And what it also tells us, this chart, is where is it going to go next? Well, we've got the high of this candle here that's got to push it higher. But what I want to also have a look at is the CSI again, and the matrix. I've actually got the 5-minute chart here, and what's interesting is this: we've had this sudden rush of buying in the British pound, but while we were talking about the British pound, as we can see here, we had the New Zealand dollar really took a bit of a dive, and it was actually against the pound. In fact, it's now swapped. It's we've got the pound Aussie and the pound New Zealand. So in fact, you've got the two commodity dollars, the Aussie and the New Zealand, being sold off quite heavily. And what the CSI does again is the New Zealand, the sell-off was first in the New Zealand, so that's probably coming to perhaps a little bit of a pause point. But the pound Aussie certainly looks as though it's got a little bit to run on this particular time frame, and it just helps you keep track of these flows. This is a market of massive flows into currencies. Then how is that expressed in the different currency pairs, and where is that where is that the strongest expression, and is that going to then potentially give me a trading opportunity? And those trading opportunities are going to be either some kind of reversal, jumping on a trend that's already started. Certainly when these lines cross on the CSI, then obviously the trend is underway, and using your knowledge of volume price analysis, you then will have the confidence to either join the trend or wait for the reversal. Some traders do not like entering an existing trend. Having said that, the pound has been absolutely hammered in the last, how many, David? Weeks and months. It's gone down thousands of pips. Now, if you're not comfortable, then on a longer time frame, then you simply have to wait. But it would be a shame, because volume price analysis gives you the insights and the information you need that you'll be able to join that trend. Now, to go back to the pound New Zealand, which is what I've got here, and we can see here, just put the Renko up, reflecting what has happened. And as you can see here, we haven't had any volatility on the 30-minute chart. This is a much more measured pair. This is the strong move higher that we've seen that was captured by the CSI. Obviously, it is actually preceded by this really long move lower, and again the move came to an end on this volatility candle. We had a reversal back into the candle, but we also had a hammer candle here, which was also telling us that this, we were going to see perhaps the start of a reversal, but it's certainly not been a fast reversal. We've had a period of congestion, more volatility, more trading within a tight range, and then we've had if you like, the potential for this to carry on higher, predicated also on weakness for the New Zealand dollar. And I suspect the same, if you looked at the charts for the pound Aussie, you would see the same type of price action. Going back to volatility, we had this volatility candle here. There was a breakaway also from the volume point of control. We saw this retrace, a little bit of congestion, and as I said earlier about breaking the highs and lows of these volatility candles, which give you further support and resistance levels. When it kindly did break away, again we had a little bit of congestion, but we had a fairly steady move lower. As I said, it's not it's a much more measured pair, albeit we do get the odd volatility candle as well. And on the faster time frame, now here we have the reversed scenario that we had on the pound yen. We had the break from the volume point of control, and on momentum volatility, it pushed up and it pushed up again, and it's on the second one we are now kind of moving sideways and possibly on a reversal for here. Let me just put the template back here on here. And what the Renko does, it helps us with potential entries and exits. And the way I use this indicator is really, I like to see a confirmation. I'd like to see the trend monitor in the same color as my trend dots, even if it means I've actually missed some pips in the initial move. As we see here, we have a change of the trend dot. We have an intermediate color before it goes bright blue, but I really like to see the two bright blues together. And then so what? I've missed that bit of the move, but I'm not guaranteed, but I've got I'm happy to take that section of the move. Now, coming out, the trend dots went red, but this didn't go bright red. So it's really how you want to play it, whether you want to hold on or you say, do you know what? You look at the time charts as well and you say, nope, I've had enough. I'm going to come out here. And here we have a much cleaner entry. We have a change of trend dots, almost followed by a change of dots in the trend monitor. That's really the momentum. This is what volatility gives. Volatility can gives it injects energy into the move, and that is what we're seeing here. And and now as I said, we've got the volatility. Are we seeing a reversal? And we look at the CSI, and we can see that. We can see the New Zealand turning up. But it'd be interesting to go and see what's happening on the pound Aussie, which because the Aussie is still being sold off. Now, what you say then, we'll say, okay, well, I can see a sell of the Aussie. Does that mean that there's potentially more? There's a pair where it's better to go and look that the Aussie is being sold and sold heavily. It could be against the pound. We can see here it's a spot 2 there, but also look down at the other end. You've got the Aussie Swiss. Where have you got to? Let's just flick that on. So the Aussie. There we are. Aussie Swiss, Aussie dollar. Maybe that's got some there is some potential for that to move lower. We've got the Aussie yen here at spot 17, as I said, and we've got the pound Aussie there. Have you got the pound Aussie there, David, or are you not going to bother with the pound Aussie? Are you following? David's still following cable, and that's at a spot 5. I'll pass back to you, and then we'll wrap up. Is there anything else you want to say to that, or is that it? I'll move over to you, Donna.
Thanks, darling. Sorry, I always have my chat box closed. Any questions in there?
I can't seem to find it. Was it Michael? Is the Ninja Trader volume? Do you want to deal with Michael?
Just on pound Aussie, I'll just go back to cable for a moment, and I'll answer that question. I think that's in there. Hold on a minute. Just pull my chat box up. Michael. Right.
It's the same as volume.
Volume, yeah. Michael, the volume is sorry, my chat box is keeps closing up all the time. Volume up down indicator. Yes, it is exactly that. It's the up down indicator. Yeah, it's right. Sorry, still having trouble with my chat box. Volume up down indicator showing your charts or standard indicator. Right, the volume up down is a standard indicator on Ninja. Yes, it is exactly that. It's volume up down, and it'll present exactly the same way as here. It's not in the quantum indicator package purely because on MT4 and MT5 there was no equivalent as such in terms of the colors matched to candles, whereas in NinjaTrader it's standard. That's what it does. So we didn't migrate that particular indicator over onto NinjaTrader because there wasn't a great deal of value in doing that. So it's not available as such because you've got it as standard on NinjaTrader. I hope that makes sense, Michael. And basically, just to pick up, I've switched these over while Anna was talking. We're now in the correct order, so we've got the 10-minute here and the 15-minute, and it really just does reinforce what I was saying earlier on. Just pull that up, make it a little bit easier on the eye, and that one as well. Pull that up there. There we go. In terms of the indicators, you've now got a complete set of volume points of control. You've got it here, 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 and here. What is that telling you? We're trading around the volume point of control up to the 15 minutes. So, there's nothing particularly strong going on in terms of general direction for this particular market, this particular pair at any rate. you're not expecting anything until you see a move away from that volume point of control. It's just self-evident across the piece. The other aspect to it, here we go. This is the volatility indicator I mentioned. What are we seeing? We're seeing a reversal within the spread of the candle. It's what we expect to see. Ton of volume here. The market makers are in here, no question, racking it about, trying to tempt you into trade, and a lot of people will have been tempted into trade that and now sat there, as I say, regretting that decision. You know, this is not a huge move. It's, 10 pips, whatever it is, but it just demonstrates the power of the indicator and also what you're dealing with all the time in terms of volatility and market maker participation, and what you have to understand about this business, what they are trying to do, and what you have to be more intelligent and have the tools and techniques and understanding of the markets so that you can actually avoid all these tricks. Sometimes they will move price with no volume. They'll move it on a trap move. They'll jack it up, very low volume underneath the candle. You see that quite often. Again, it's another trap move. We're now reversing back again. It's what we expect. Trend monitors transition here back to red. It's starting to come out of that blue phase, starting to revert back again. No flicker here at the moment. And there's so many VPA lessons here. As I say, I would urge you, if you're not trading today and you just want to practice volume price analysis, then switch to a fast chart like that. If you're on NinjaTrader, terrific. It gives you all the lessons. You've got the support and resistance, you've got price action, you've got volume here, you've got the volume down here, we've got nice widespread candle here. What are we talking about? This is 2 pips for goodness sake. But again, the principle's the same. Decent selling under there. Volume's dried up a little bit on that last one, but narrow spread, so it's in agreement. We've got price-based support here coming into play and price-based support here coming into play, now acting as resistance. And on you go. Where are you looking for the next pause point? Well, you've got decent volume here. If we break through there, then maybe down to here. Light volume here through here. The market should go a lot quicker, blah, blah, blah. The trend line here has dived down. As mentioned, it's up at the top here, got to the extreme. Decent away from here, into transitional colors, diving below now, trying to rally a little bit, but carrying on, still strengthen the momentum there. That's the speed you have to think at, and that's the nature of scalping. It's as simple as that. If we go up onto a very slow time frame chart of 10-minute, or comparatively anyway with regard to 15-second, what have we got here? We had the volatility trigger, we had another one here, we had another one here. It's just volatility on volatility, longer candle here, indecision. We've got volatility triggered again. So what are we expecting on this one? Reversal back inside the spread of that candle. So the chances are this reversal, this move lower on 10, which scalping traders may be taking advantage of, although it's pretty tight. This is what, 6 or 7 pips, fine. Then expect that to reverse back inside the spread of the candle again. So we're going to get whipsaw price action, constantly throughout the day. That's the nature of the beast. If you're a scalping trader on 30-second or maybe even faster on 15-second, fine. We're moving away from the volume point of control. Decent amount of resistance in overhead, which will act as protection. You want to take a trade and take a few pips out of this, fine. Move through these 2 levels into the volume here. Might congest a little bit here, struggle a little bit, but it gets down to that level. Could be away again. Trend monitor supportive. Just drop that out of the way again. There we go. And this is the sort of price action you expect on a day like this. It seems odd. You think, well, why is it that the American markets have such a colossal influence? But they do. And, even though the Forex market trades 24/7, the fact that it's a huge holiday in the US is going to impact what goes on even in the London Forex session. It's as simple as that. You just have to accept it and be aware of it and be prepared for it. Just see what, I'll just flick this over onto another pair. Let's have a look at the New Zealand dollar. Just have a look at that. And then I'll pop over onto the CSI as well, just see what's going on here. Probably pretty much the same. Yeah, pretty much. Lots of volatility. I've got volatility here on 10. There we go. Similar sort of thing. Longer legged doji candle, reversing back inside the spread. It's all pretty much the same. Let's have a quick look at the CSIs on multiples. So here, that's on the array. Let's go back to the CSIs. What happens in NinjaTrader also is it was developed this way that you can have all these multiple windows open, but in order to conserve your processing power, what NinjaTrader does is actually temporarily close these windows in terms of drawing data, so it just takes a second or two to reload. It's just a function of the way Ninja's been developed in order to maximize the capacity on a system rather than overload it all the time. This is what we're seeing right now on pound, selling of the pound. Dollar still, we've got a decent amount of dollar buying there. So, that's the reversal we're seeing in there. This was the selling of New Zealand dollar, which Anna highlighted, strength in the pound, weakness in the New Zealand dollar. Up onto 10 minutes, starting to kick over there. A lot of buying of Swiss franc this morning, and that's the selling in the New Zealand. So if you're looking at this from a reversal perspective, you might well be eyeballing the New Zealand Swiss, for example, maybe the New Zealand dollar if the dollar continues to climb up here, maybe even something to do with the euro if that continues to climb up. Got some decent strong selling of Aussie. So pound Aussie would be not a decent one to look at right now because we've got a cross. That trend will be underway on Aussie pound, or pound Aussie rather, on the slower time frames. And what it comes down to all the time is your tactical approach to market. For those of you in the forum, I highlighted a lot. There was a question came up yesterday or the day before, I can't remember now, really about what I was trying to explain was low risk trading opportunities, and the lowest risk trading opportunity, in my humble opinion, others might argue against this, but this is in my humble opinion, is that when you've got a congestion phase developing, if you can apply patience, they are the lowest risk trading opportunities, purely because, first of all, the anticipation of a trend developing anyway, because out of a congestion comes a trend, and it's part and parcel of what we explain in a great detail in the education program. But secondly, and far more important, is the fact that once you've got a break away from a congestion phase, you have an immensely powerful area of either price resistance or price support then in place, to which you can then apply your stop loss positions, which can be hidden behind that natural barrier, that barrier that's been created by the market for you. And should the market reverse against you, which they often do on breakaways, then it acts as a protective barrier. It's likely to cap that move. And in addition to that, if your stop loss is behind it, then you've got this very strong protection in place to prevent the market coming back against you. And that's why it's such a strong approach. And or in terms of risk, it's the lowest risk you can possibly take in any trading opportunity. And once it's confirmed with volume, which is the key to it, if you like, because breakaway trading gets a bad press for that sole reason. If you apply volume to breakaway trading, then it really is the lowest risk opportunity of all. As I say, others might disagree, but there we are. It's just my 2 pennies worth. And all you need is patience. And as Anna's just said in my ear, it's just such an easy place to place your stop loss. You don't really have to think about it at all. You just look at the chart, and if you've got a nice narrow corridor of price congestion above or below, whichever direction you're trading, and off you go. I'm just looking to see what's going on here. I mean, the pairs you wouldn't look at right now or consider, you've got the dollar rising with the euro, so that's flatlining probably. Dollar and yen here as well, euro, yen, these are all rising together, so you wouldn't look at pound Swiss, for example. There might be some differential trend developing there, but generally speaking, there wouldn't be much. So if you're a trend trader, you're looking at crosses, you're looking at the strength of lines moving, so you'd be looking at, if you're trading an existing trend, you might look at the Aussie Swiss, probably moving quite nicely. Swiss is rising strongly, Aussie is falling quite strongly. And to go back to what I was about to say was, if you're looking at this as a reversal perspective, then you'd look at something like New Zealand dollar, which is moving down into strongly oversold, and the Swiss franc, which is moving up into strongly overbought. Just have a look on the array, see what's going on. And this is the 5-minute array. So we've got some decent buying on euro. This is the weakness we're seeing in the New Zealand dollar up here. Euro New Zealand, pound New Zealand down the bottom. Got New Zealand yen, dollar, Swiss franc, CAD. So it's pretty strong. You can see it here. It's a strong trend on New Zealand Swiss. You don't even need to go to the chart. That's what's developing. That's backed up with the New Zealand dollar. New Zealand yen here is following it. And up at the top here, you've got Euro New Zealand and pound New Zealand, pretty strong. And also on the currency array, it also gives you a heads up to when pairs, as opposed to individual currencies on the currency strength indicator, now are in pairs territory, It's whether they are approaching overbought or oversold regions. You can see her up on the Euro New Zealand. This has gone to solid. It's telling you that this is a potentially overbought situation. We've gone to bright blue. The approaching overbought conditions are where we have in brackets and a darker blue. And once a pair, and I use the word constantly, potentially arrived at a reversal point, then this is flagged up as bright blue and the brackets are removed, and it also goes solid on the indicator here. Down at the other end, we've got some pairs approaching potentially oversold situations in brackets, darker red. Once they get to those conditions, then they'll go bright red and the brackets will be removed. And this line will go solid. So it's a multiple indicator. It gives you instant view on the strength of trend. It gives you instant view on sentiment towards a particular currency. And it also gives you conditional aspects of overbought and oversold in terms of currency pairs as opposed to the currencies themselves. Just go back onto the charts again. There we go, we've gone way over time again. Apologies. Well, not way over time, we've got a little bit over time. And here we are on pound New Zealand. I'll just put that back to pound dollar where we started. And it's a nice feature on Ninja. Just link these charts up with either the instrument link or you can interval link as well if you wish. You can have both, and it just changes them all automatically. So it's a really nice feature of Ninja Trader. A bit limited in terms of multiples because you've only got a certain number on here, but nevertheless it's nice to have. Volume point of control still in evidence. You know, we've got volatility here again, so we're expecting that to trade back inside. So we've got volatility, and yet more volatility, and really not going anywhere, which is what we expected to see, to be perfectly honest. So it's no great surprise. There we are. I'm going to wrap up there, and we are due back at 12:45. Again, not expecting any great price moves this morning for all the obvious reasons we've discussed. So if you are trading today, just be careful and be very light on your feet and don't overstay your welcome in the markets because there'll be a lot of whipsaw and a lot of sideways price action. We will see you later. Thank you so much for coming along today. I hope you've enjoyed it and found it useful. And we will see you both later. See you all later on from both of us. So thanks for coming and bye for now. Oh, hold on a minute. Hold on one moment. Sorry, Anna was just checking whether we are back later. Obviously, given the market state, we are back later. It might be a short version. We'll just see what's gone on, but we will be back later, and it may be a short version, short webinar as well. So thanks a lot for coming on. See you soon, and bye for now.